but I believe in giving back, and I believe in sponsoring a lot of different charities and diversifying and helping spread that around to a lot of different organizations. I don't just pick one and stick with it. I think there are so many well-deserving charities out there.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth starts every day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal, to help you scale and compound your wealth and life so you can give more or all of it away to help MVPs. Hey, I'm your host today, Brett Swartz. In every episode, we feature some of the world's top entrepreneurs, millionaires, and billionaires. They share their principles, values, secrets, and wisdom, providing each of us with the insights we need to reach the next level of faith, success, and impact. I'm excited about our next guest. He's out of Arkansas. Actually, first met him about a year and a half, 2 years ago at a big family office club event when he was on stage speaking about raising and placing capital. He is the founder and manager at Rockstar Capital Group, and his goal is simple. He has a desire to help all high net worth individuals, his clients, reach financial independence through various real estate investment opportunities. Please welcome to the show with me, Brandon Rockstar Rooks. Brandon, how are you doing?
Doing fantastic. Thanks for having me, Brett.
Excellent. Yeah, absolutely. Pleasure to have you. For our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Man, I'm old, so it's kind of a long one, but I'll try to highlight it. I grew up poor and blue-collar workers. Dad was construction. Mom was like a waitress. I went in the Navy right out of high school. I just didn't enjoy school. It was boring. And I went in as an anti-ship missile defense electronic warfare technician and operator. So I had a high IQ, got accepted into one of the higher advanced programs. But after 6 years of troubleshooting problems and being in the Persian Gulf 3 times and seeing combat, I felt like I did my duty, served for 6 years, and I got out. And I actually went into sales. I sold MCI long distance, if anybody can remember that. I sold cars. I had started a mobile disc jockey company, and I've been a kid. I was selling when I was a kid. I went door to door and sold out a catalog and had lemonade and cookie stand, and it's just something I acclimated to. But it was pretty interesting. I came out of the Navy and I went into sales, and then I ended up getting headhunted into in-home water treatment sales. Became one of the top 10 reps in the world for EcoWater water treatment systems, and they were the ones that actually started water treatment systems for in-homes. The name was Lindsay at first, and then I got headhunted into the mortgage industry in the early 2000s, and then I got headhunted into big-scale real estate development, and was primarily in Lake of the Ozarks, Missouri, which is central Missouri. It's a resort, retirement, second home type destination. And at the time, it was about 2006 that I got recruited into bringing projects down there and taking them to my investors that I had been providing mortgages for years. And that was 2007. I had about $86 million in projects under contract with a hedge fund group out of California. And that was '07. I think almost anybody that knows anything about real estate probably knows the story after that. So 2008, lost everything. I personally lost about $5 million. Every one of those projects got shut down. Funding, banking, they had to pull out. And it took me a couple years to get back into the real estate investment arena again. But what I learned was, don't be all in one market, and don't be all in with one buyer. And that's what really helped change the game for me as I went back into real estate in 2010. And I did have multiple investors that had put down some deposits on some projects. Luckily, it wasn't, a ton. It was like $7,000 deposits, about 100 different projects. And I actually went back over the course of the next few years and replaced or reimbursed or forgave, in other words, helped them find new deals. And I gave up my commission so that every one of those investors got their deposits back, because I believed that if I was the one that took them to that investment, then that was my responsibility. And even though it wasn't my fault, it was just an integrity thing. And that comes from growing up how I did and being in the military. It's just the thing about integrity and honor. And I wanted all those investors to have confidence that whatever they did with me in the future, that I had their back. And so that's kind of how I ended up where I am. I've done several different things. I've invested in every type of real estate you can imagine. And at the high point at 2015, I actually sold about 954 turnkey new construction and renovation properties across the country to my network of investors. And it was shortly after that I didn't like where the returns were going. Prices were going up, rents weren't, and wasn't hitting the cash on cash returns that I liked. And there was a group that I worked with, which is what I do now, out of the Southeast, that they were just starting to ramp up in new construction. And they asked me if I could raise capital to help them build more product. And I'm like, okay, we can raise capital. I can give a return to my investors that I'm accustomed to giving them, which I always shoot for a 15% annualized return back to my investors or better. And by doing that, we started setting up just private investment notes, and we were primarily funding lot acquisitions or land acquisitions. And then they would get their own construction funding. So that's where we started carving out a niche. And started off with probably about 40 or 50 of my investors, and started doing private notes, and it started to become a lot. You had different dates and different exits and different maturities and tracking, and it was just a lot of paperwork. And then, talking with an attorney, he says, well, you really need to, put together like a Reg D fund, and that'll be easier for tracking and managing. So, kid with a GED, came out of the Navy, successful in being in sales, gained a loyal investor following because of my operation, how I do things, been fortunate to meet the right people, and now next thing you know, I'm a fund manager, right? And next thing I know, I had 4 Reg D funds, and I called my attorney again, and I'm like, this is getting chaotic again. And he goes, well, you need a Reg A. And I'm like, what's a Reg A? And he says, you can have as many non-accredited investors as you want. You can raise up to $75 million a year without having to start a new fund. He goes, by the way, now you have to call it an offering, which is why our website is Rockstar Capital Fund, but now our company is Rockstar Capital Group, and we have an offering, SEC and all the rules that they like to throw out. But it allowed me to merge all of my Reg Ds into the Reg A, and I can have as many of my non-accredited investors as I want, which, by the way, are all referrals from my accredited investors. I haven't made a cold call in 20 years. I do no marketing. I do speak at some, family office things. I get asked to speak. I get asked to be a sponsor at certain groups. But we have built our entire operation around cash flowing on dirt, which I know there's really not a lot of guys out there doing what we're doing. And over the course of the past 10 years in that relationship with this group, which you're fully aware of, and it's been the last 5 years that BRD Land and Investment has gained its traction. And I've helped them go from their very first 99 townhome lot piece of ground. They now have $1.3 billion of retail ground in their pipeline, over 45,000 lots. And we've raised a total of about $85 million against that $1.3 billion of dirt. And they're selling to some of the biggest builders in the country. And they've got D.R. Hortons and Lennars and Ryan and Stanley Martin and Smith Douglas. You can look them up on the builder, rankings. Got them all on speed dial. They've got what is the most needed asset in America right now is dirt. You can't build anything without dirt first. And the builders that are buying this dirt, they're putting up workforce housing, single family homes, some duplexes, fourplexes, whatever. But the end price falls in that $250,000 to $500,000 price point, which is the most needed asset we need in America right now. We haven't been building enough homes. So, long story short, all of that, I got into a niche. They're in 5 states. They have built a very unique operation, and it's only getting bigger. They've attracted some high-power execs to the team. There was one that just handed in his resignation last week. and he's coming to join the exec team. And all I can say is that well known, and he's coming from a top 5 builder in the country, leaving his operation to come over to help us because we have room to scale and duplicate this across the country. And it's just amazing. I'll kind of leave it at that. I know you're going to have questions, and that's a lot of information in a short amount of time.
So good. And by the way, you can find more about Mr. Brandon Rockstar Rooks by going to rockstarcapitalfund.com, rockstarcapitalfund.com. I love the origin story. I love the background. I love starting from growing up poor, right, but going into sales, going into the military. Thank you for your service, and then just continuing to solve problems and add value to your clients and your investor base. Living, and going through the tough times of the '08 crash, but making it right, for those who got hit as best you could, and then parlaying and then building these 4 funds into Reg A after eventually emerging into Reg A offering. Really, really incredible. Yeah, and I couldn't agree with you more. Housing and the crisis that we're in right now in America is fundamental to so many things. We're margin in life, margin for healthcare, margin for education, margin for just living, right? And if you don't have the basic necessity of affordable housing, it's tough to do everything else. And so, yeah, doing what you're doing with BRD Land is incredible. So, taking another step back, Brandon, I believe we've all been given certain gifts, and these gifts mean blessing and help to others. What would you say is, your top 1 or 2, superpower gift that you've been given?
I, coming from nothing, I still think of things in that mentality of growing up with very little. And so I tend not to overspend, Do I have an income that would allow me to buy, $400,000 supercars and $10 million homes? Yeah. Do I have the assets, to allow me to do that? Yeah. But I believe that making sure my investors are taken care of first is my number 1 priority. And I teach my whole team, which we're a family-run operation, by the way. My 2 sister-in-laws work for me. My son works for us. My wife's best friend that she's known longer than me, and we've been married 29 years. She's basically like a sister. She works for us. But I tell them, first and foremost, we take care of our clients. We never let a call, email, or text go unanswered in the same day. And our number 1 priority is to deliver average annual returns that our investors just won't be able to see in other places. And I could certainly make more money from what we do and offer lower returns, and it would still be consistent with what other funds are similar to us do. But I just don't operate that way. So take care of our investors first and deliver those returns, and then give back. I don't need more than I need. I have a nice home, which I'll tell anybody, it's 5,000 square foot on 6 acres in Bentonville, Arkansas, with a 55,000 gallon pool, and I paid $500,000 for it. So, and I'm not moving, right? And I do have a $100,000 car, but damn near everything is $100,000 these days, right? So, but it's my muscle car. It's Challenger with 800 horsepower. That's my one thing, right? My accountant said you better buy something because you need some deductions. But I believe in giving back, and I believe in sponsoring a lot of different charities and diversifying and helping spread that around to a lot of different organizations. I don't just pick one and stick with it. I think there are so many well-deserving charities out there that when you're fortunate to have a great income and have more than you need, you should be helping out. And that's just personally me. So I when I find enough time, I'll probably dive in and start some sort of a charity and really get focused on it. But currently, with the way our operations are, the way we're growing, I work 14-hour days. Everybody knows this that knows me. And I work 6 days a week, and I love it. It doesn't really feel like work. But I believe in giving back. It's our duty to help others that have been less fortunate.
Absolutely. Too much is given, much will be required. But I like that you have built up an amazing, mindset and stewardship to give back, right? And to not take for granted the wealth, and to not also be overindulgent, right? You're like, hey, you got some couple cool things, right? But you're like, hey, how can I give back more? I love what I'm doing, and you're compounding that impact, which is really about what we're here at Built to Billions podcast, which is for those that have scaled from, 0 to millions, which you definitely have, and then on the way from millions to billions, but more than that, to practice a stewardship mindset, right? Of not, holding on and gathering as much as we can, but really about how can we give as much to help MVPs, help the most vulnerable people in this world. So I love that you're doing that. So let's dive back into, the marketplace a little bit and talk about what you're seeing, right? We're in an election year where there's a lot of challenges going on, but to me, land and building and housing, we're 5 to 7 million units short is the estimates in America. And you're right, that 200 to that $250 to $500,000 range is crucial, right? And so the fundamentals of land entitlement and control make a ton of sense. Walk through for the listener who may not know the difference between buying the land and having to hold all of that carrying cost, and then to try to take that to entitlement versus controlling the land with the deposit and then working through over a period of time to then essentially flip it, if you will, or double close with a national home developer, just so they can hear that.
Yeah. So glad you're so well aware of how this operation works. And it was Rockefeller that said, control everything and own nothing. And one of the simplest ways I could put it is, I kind of give this example. Our independent development consultants, these are guys that were land asset managers with some of the top builders in the country and in the Southeast. So also let's think about that for a second. Land is land, but land in certain markets is not as valuable as land in other markets. A lot of people are moving from a lot of areas into the Southeast or the South or other parts of the country. You've got to be focused on where the people are going, where those homes are needed. But one of the things I say is we've amassed this team of independent development consultants that already know what all the builders want because they've worked for them. And now they work for us. They go out and source ground. They find an owner, and they're like, okay, look, your ground is worth X. But we know it's in the path of growth. We feel confident this is something one of the builders that we work with would want. And if you allow us to put this under contract and stay in this with us, then we'll spend all the money to get it fully entitled, permitted, shovel ready. Shovel ready means we take it once, I don't know if I want to give away all the secrets. Let's just say it's shovel ready so that when the builder buys it, they can close on it, and the very next day they can put construction equipment on the ground. But we tell them, look, if you allow us to do that, your property would be worth X. And then they negotiate a price somewhere in the middle. So one, they get the owner excited about somebody else will do all the work. They'll get to make more money. They may just have to wait 9 to 18 months before it gels, right? So long story short, let's say they agree on a piece of ground, and they're like, okay, we're going to buy it for $4 million. And they put it under contract. They put some extension clauses in there just in case. Municipalities are our biggest pain in the butt, so to speak, right? Those guys, sometimes they're slow, but they put it under contract. And they go and they do deposits, and they do environmentals, and they do steps that take them through what we call risk hurdles. Once they're through the risk hurdles, they'll come to us and go, okay, Rockstar, we need $500,000 for this piece of ground. And they're going to pay us somewhere between 20 and 30% APR, which sounds ludicrous, but the devil is in the details. Let's say they do 25%. And it takes a year to get it ready. And the time comes, it's time to close. They're going to sell it off to the national. They simultaneous close with that builder. The builder actually pays the $4 million, and they pay back the $500,000 they borrowed from me plus all the interest, which might be about $125,000 at 25%. But over the course of 1 year, that $125,000 interest works out to like a 1.5% annualized interest rate on a property that they'll sell for $10 million. They'll be all in at 4.35 or whatever, 4.4, 4.5. They'll be all in, but they'll sell that ground for $10 million. Their profit margins are huge in dirt. It's one of the highest profit centers I've ever seen in any aspect of real estate, which I wished I had learned about dirt and how valuable it was many years ago. It would be a whole lot different scenario right now. But
wow,
that's kind of it in a
pause
nutshell.
there. Like that is incredible, right? So make sure everyone capture all of that, right? These individuals are experts in all things bringing land from, let's say, no entitlements, not ready to build, lots of things that still need to be done, from, let's call it, zero ready to build to fully ready to build. And they do the work in between, working with the municipalities to do all this for the entitlements, for getting it basically ready so that the developer can show up and do what they do best, which is develop properties, right? And the person who's the farmer, or the person who's owned the land for 10, 20, 30 years and doesn't have that expertise, maybe doesn't have that capital, they still win too, right? So they're finding it mutually beneficial. They get like a 4 million, let's say it's worth 12 at the end of it. And it's a double close. The developer plays the 12, the 4 goes to the, let's say the farmer who had the property, and the other 8 is the profit margin. And the only money at risk here is the deposit, and the deposit might be around 500,000 or so. And even then, there's other clauses that can get out along the way that you may not even lose that 500. But they're so good at this because they're doing so many of these that they often know which ones are, to go. They can't control everything, but they have a good sense of what's going to go. Is that a fair summary, Brandon?
It is. And in the 5 years we've really been doing the BRD land model, I think there's only been 1 or 2 projects that have fell out and they lost less than $100,000. And in the scheme of things, that's nothing. So that's exactly right. Put it under contract. They're going to do their homework, but if something slipped through the cracks, they can cancel that contract. They don't have to close on a piece of ground that they can't move. And they don't get stuck with a piece of ground they can't move. Like if you just went to the bank, like most people do, go to the bank, buy the ground, then they start the process. Well, you might dig in and find there's a moratorium, you can't get enough water out there, it's got wetlands, the topography doesn't work, you hit a bunch of rock. That's what makes this brilliant. The $1.3 billion of retail ground that's in this pipeline right now, which is growing every month, by the way, comfortably we can say that we know that 95% of that, if not more, is going to go all the way through to completion. So that's huge. That really is huge. And the lot count is huge, and the locations are fantastic. They're in Carolinas, Florida, Georgia, and Texas currently. And the only thing is if I could raise capital faster, we could open more markets. But we're still one of those niche operations, and we're still a growing operation, kind of like a mature startup, so to speak. And it's difficult for me to raise that capital, that really big capital, like get someone to invest 20 million or 50 million, just because it's something different, and people are so used to the norm. And but we're getting really close. When we have that right C-suite of execs over at BRD Land, and they do their audits from this year, they're on track to knock it out of the park, and their profit margins are at a minimum like 30%. Profit margins. I've seen 40%, 50%, 60% on certain deals. We're getting there. And there's going to be a time when it's just going to blow up. Kind of like when Amazon, all they did was sell books. The next thing you know, they sell everything in the damn world, So
absolutely amazing. By the way, if you want to learn more, you can go to rockstarcapitalfund.com. That's rockstarcapitalfund.com. As well, if you're listening to this and you're curious, like, man, I wish I had capital that I could invest into something like this, but it's locked up into this big business or even NVIDIA stock or Bitcoin or other real estate project where you're making, maybe 5 to 7% return. And you're like, man, I'd love to get these double-digit returns, but I have to pay all this capital gains tax. Well, we have a solution for that too. And that's actually why we work with Brandon Rockstar Rooks for these types of opportunities, and other groups that have these opportunities that you can sell, defer the tax, and go right into these, and oftentimes double, maybe sometimes triple your cash on cash return. It's all about structuring, and this is really what we're talking